John. Good morning, everyone. I'm John, and these are the three market-moving headlines you need to know today. We're looking at a potentially record-breaking month for IPOs, a major automaker weighing thousands of job cuts, and India's regulators turning up the heat on billionaire family offices. Let's dive in. Record October IPO pipeline. Our first story. The IPO market is poised for a record $5 billion showing this October. Flagship offerings from Tata Capital and LG are set to lead the way, and bankers say strong demand could unlock a slew of additional listings before month-end. In a year marked by rate volatility and patchy risk appetite, the rebound in India's primary market stands out. Why does it matter? A successful run would inject fresh liquidity, validate equity valuations, and offer a benchmark for private market exits. It also signals global investors are willing to look past near-term macro headwinds in search of faster growth. Looking ahead, watch pricing ranges and day-one performance. If these debutantes trade well, expect several mid-cap names to accelerate their timetables. If not, the window could close as quickly as it opened. Let's move to our second story, shifting gears, literally, to the auto sector. Renault eyes 3,000 job cuts. Renault is considering trimming up to 3,000 positions, according to the French outlet L'Informe. Management says the move would simplify, speed up execution, and optimize fixed costs in an increasingly competitive market. The backdrop is tough: slowing European demand, rising EV development costs, and persistent supply chain friction. Why it matters? Cost discipline has become the battleground for legacy automakers racing against both new energy entrants and tightening emissions rules. For investors, the potential cuts may bolster Renault's margin narrative, but they also flag execution risks and possible labor tensions. Keep an eye on formal announcements, union reactions, and whether peers like Stellantis or Volkswagen follow suit. A broader round of cost-cutting could reverberate through suppliers and regional employment figures. Our third and final story brings us back to India, but this time to the opaque world of family offices. SEBI scrutinizes billionaire family offices. India's securities regulator, SEBI, is intensifying oversight of billionaire-controlled family offices. The goal: greater transparency around how sprawling conglomerates deploy capital in public markets and manage risk. Although family offices are typically seen as passive long-term investors, their sheer size can sway liquidity, price discovery, and corporate governance. Why does this matter? Enhanced disclosure requirements could reshape trading dynamics, particularly in mid-cap counters where family money often concentrates. It may also narrow avenues for related party transactions and raise compliance costs. Looking forward, expect draft guidelines on reporting thresholds and potential caps on leverage. Investors should monitor whether increased scrutiny triggers portfolio reshuffling, which could introduce short-term volatility but ultimately deepen market integrity. To recap, a vibrant IPO pipeline could set the tone for emerging market equities. Renault's cost-cutting deliberations highlight margin pressure across autos, and SEBI's push for transparency may recalibrate capital flows in India. The common thread is efficiency, of capital, of cost, and of regulation. Stay tuned for pricing details, labor negotiations, and new disclosure rules in the weeks ahead.